150 countries and more than 110 partners. Uh, we believe that digital technology can help small businesses stay in touch with their clients, find new clients, and help financial service providers to continue to support them with tools they need to build resilience. In fact, as an extension of our work in the area of digital financial services, in July 2020, Axiom launched a digital maturity assessment tool leveraging Axiom's global experience and understanding of what influences small businesses owners to adopt digital products. The institutions, partner institutions, and it's open to public. It's available in the public domain in Axiom's webpage. Website, institutions can use this diagnostic tool to survey their customers about their ownerships of digital tools and comfort and using them for their businesses. The link to the tool is available at the Axiom's website, and I will also paste the same in the chat box slightly later. And those of you who are interested to have a look at the tool and test it out for yourself, for your institutions, are most welcome to do that. Now, our work involves three important areas, and we drive financial inclusion through three important interventions. The first is we find, fund, and grow companies, creating new ways to reach the underserved. We also advise financial service providers as they expand across access to economic opportunities. And we also conduct research and insights which push the industry to better serve, protect, and employ clients. According to the World Bank data, 177 million people could be pushed into poverty due to a pandemic. In this era of COVID, financial inclusion is more important than ever. Financial service providers have a critical role to play in helping mitigate the immediate effects of the crisis and helping them build financial resilience in the long run. With this introduction, I like to sort of introduce the panel. As Ari has also mentioned, we have very privileged to have with us four very, very highly experienced individuals who have been in the forefront of financial inclusions and are doing some wonderful work in this area. We have Nitin Chugh. Nitin is the CEO and Managing Director of Ujjivan Small Finance Bank. Nitin is a career banker with over 25 years experience in the financial services industry. He previously worked with HDFC Bank, where he spearheaded the digital banking vertical. We then have Gauri Tyagarajan Mukherjee, who's a co-founder of Credit Mantri. Credit Mantri helps borrowers and lenders to make decisions by leveraging data and technology, which is a very critical theme of our thing today. We then have Rahul Malik, who's the CEO of FinTech in an embedded business for Stellab Technologies, an agri-tech startup, which has built an IoT-based network in the dairy value chain industry. And finally, Sanjay Jain, who's a partner at Bharat Innovation Fund. Sanjay has been closely involved with India Stack and more recently with Oaken through his association with iSpirit. Welcome to all of you, and thank you very much for joining the panel. I look forward to an interactive discussions. So the way the session flow would be that we would have opening remarks, brief opening remarks by the speakers who would introduce themselves, their companies, and the work which they are doing. This will follow with a moderated discussions. Hopefully this will be interactive. And then we will have some time for question answers, and there's a chat box somewhere available in the web, in the below the screen, where you can pose your questions, and then we will try and answer as much. We may not have time to answer all of them, but as much we can, we will do, and then we will have the concluding remarks. Now, with that, why don't I sort of, Nitin, why don't I sort of hand it over to you? I'll stop sharing my screen, and then maybe Nitin, you can start off, then Gauri, Rahul, and Sanjay. Over to you.
Yeah, thank you, Shantanu. At Ujjivan, which is a small finance bank, we started operations as a microfinance company in 2005. The one big difference, you will notice about Ujjivan, and which is something that I also realized when I joined here, is that we are an extremely purpose-driven organization. We seriously strive for working for the benefit of the underserved and the unserved. While being a microfinance company at our roots, that is obviously our largest business. But in the business of microfinance, we also come across these nano enterprises and micro enterprises. These are really the aspiring class of people who are trying to break away from the category that all of us bankers like to force them into, which is the bottom of the pyramid. So they're really the aspiring class. In addition, once we converted to a bank, we of course started with other lines of businesses to serve the mass market, which we also call as the aspiring middle class, people who really want to do better in their life, they want to earn better, they want to live better. And that those are the aspirations really that we are catering to through businesses like affordable housing and MSE funding. Affordable housing for us is our second largest business after microfinance, and MSE is our third largest business. And we do aspire to be a large mass market bank, very clearly focusing on the unserved and the underserved for all times to come, and making sure that we cater to people in this category by use of technology, by use of best practices, and also trying to bring in very high quality standards of service. Like one of the things that really drives us is the fact that how can we offer the same quality of service, the same level of products and features as an affluent or a high net worth customer would get from any other bank. How can we make them experience banking and financial services the way a rich or an affluent customer would experience it? And for that, we do understand and believe that technology is going to play a very important role. It's also important for us to partner with like-minded people. I'm happy to share that all the people on the panel, we're trying to work in some manner or the other with each other. And I think what singularly drives us is the like-mindedness and the singular focus that, yes, there is a large market, like Shantanu mentioned in his opening remarks, specific to the MSE category of customers. I think all of us are trying to make a difference to the so far excluded category of customers by not just making them open bank accounts, but also giving them access to formal credit, which is going to be the growth engine for the economy, for the next few decades. So let me stop here and hand it back to you, Shantanu. Thank you.
Thanks, Nitin. Thank you very much. Wonderful. Gauri, over to you. Gauri, yeah.
Hi, can you hear me?
Yeah, Gauri.
Hi. So I'm Gauri Mukherjee, one of the co-founders at Credit Mantri. Credit Mantri was created to solve for a problem that we saw consistently in all our past lives working across financial institutions, which was if 100 people applied for a loan, less than 20 got access to the product. And what we felt was, and the same 20 who got access to the loan ended up getting it from multiple financial institutions. So the question was really what happens to the remaining 80? Because it was inefficient marketing dollars spent in sourcing these applications and unmet customer demand in terms of unfulfilled requirement for credit. So this, what we call as the 8 on 10 problem, or is really what we call as the credit invisibles. So to a large extent, these 8 people who applied for a loan were invisible to most financial institutions and therefore didn't get access to the product. So this 8 out of the 10 problem of the credit invisibles, when we looked at it a little deeper, what we figured was consumers and small businesses that fell into this 8 out of the 10 problem belong to 3 categories. Those who had a black mark on the bureau, so no lender was willing to touch them. The second use case that ended up having a loan rejected was customers who have never borrowed before and therefore didn't have a footprint on the bureau, and most lenders therefore didn't have a method of evaluating them. And the third use case that we felt was resulting in this 8 out of the 10 problem of credit invisibles was consumers who were credit healthy, but their incomes every month were quite low, as less than 25,000 rupees a month. And therefore these individuals or small businesses did not qualify for a loan amount large enough for the unit economics of most of the private and the larger institutions to work with. So solving for these 3 use cases of what we call as the credit challenged customer with a black mark on the bureau, the never borrowed due to credit customer, and the low income yet credit healthy customer is really the heart of what we do at Credit Mantri. So given the business that we are in, the unit economics are typically low because these are consumers whose need for credit is small or their affordability for credit is quite low. or they have a black mark and therefore have a repayment requirement. In both of those scenarios, the unit economics have to be very sharply run and managed in order to make it viable and make it as a sustainable proposition. So that is fundamentally the heart of what we do at Credit Mantri. We have a registered, we launched our platform June of 2015. So we're about 5 years old. We've got close to about 10 million users across about 7 million of them individuals and about 3 million of them small businesses. And we work with 50 plus financial institutions on the supply side across products that are typically, for new credit could be standard products or could be tailor-made products that are only available on our platform, or on the recovery side where we help consumers to repay their delinquent loans. So that's broadly the supply demand, the sense of scale for our business. And in terms of what we do to the consumer, we offer a free credit health check. Consumers come to the platform, we credit profile them. The part of credit profiling, we start with institutional data, could be bank or bureau. We layer it with alternate data, could be user declared data like SMS or bank state SMS, social app data, etc., or statutory data, which Sanjay will quite clearly relate to, be it PF, Aadhaar, GST, etc. Create a complete credit profile, and based on the consumer's unique credit profile, products and services are offered. So that's really the heart of what we do at Credit Mantri.
Thanks, Gauri. I think great introduction, and in fact, we have covered some of the questions which I plan to pose to you. So I need to think about some more additional questions, but hopefully that will there. So maybe Rahul, you want to go next? Sanjay, I know you've got some problem with connection. This thing we can't see you, but hopefully you can come back soon. But in the meantime, Rahul, maybe talk a bit about what you're doing, Stellapps, and.
Sure, thank you. Good morning, everybody, and thanks for having me on the panel, Shantanu. Pleasure to be here. So the way that what has Stellapps been doing? Stellapps is essentially an agri-technology company which for the last 7-8 years has installed IoT devices on a pan-India basis in the dairy value chain. So what do we do is that when milk is procured from the farmer at the village and these are now obviously absolute deep rural India. From there, our equipment actually helps the milk procurement by the dairy by grading it and pricing it automatically. And then it moves through the value chain, and we've got devices all through the value chain monitoring the quality and quantity of milk. All these devices are connected up via IoT, and comes up into the cloud. So we get data coming into the cloud every day. So what do we have? We've got about 34,000 villages now in India where we've got our devices installed. We've got about 2 million farmers who are registered on the platform, after which about 700,000-800,000 interact every day. We get therefore more than 10 million data points. Milk is poured twice a day, morning and evening. So we get more than 10 million data points every day that comes up. And this data is obviously becoming the basis for a whole lot of analytics that we are moving forward with. We are currently digitizing nearly more than 10 million liters of milk, which places us, we're not a dairy, but if you talk about touching the milk, we are probably second or third in the pecking order after Amul and KMF in terms of the amount of milk that goes through our systems every day. So that just briefly is what we're doing. In that, using that data, about 2 years ago, the organization decided that we should move towards some value-added services, and for that, last year we've moved into putting up our financial services business on the back of this data, and we are building out a whole host of services, including credit scoring and things like that, which I think we'll talk about a little later. So that's essentially what we're doing. We are practitioners, we are on the ground, we've got people supporting this equipment, we've got payments happening, we've got credit coming through to farmers using all our data, and we've got partners like Nitin mentioned. His bank is just about to, we're just about to sign up with them. We've got other banks as well, and that's what we're doing at the moment.
Right.
Yeah.
Thanks, Rahul. Thanks for the introduction. That's great to know. And then finally, Sanjay, over to you if you can. Oh, good. You've come on video. That's excellent. Yeah, Sanjay, you're on mute, I think.
Yeah, sorry about that. My internet connection has been acting up, and but it's great to be on this panel and hear all of the work that my co-panelists are doing, and it's something that I've been a part of this ecosystem for the past many years, and starting with Aadhaar, we looked at how we could bring in formalization into the people who are currently underserved, because that would start to give them access to banking, and then with payments, hopefully they would be able to create data trails, which would then allow people to give them credit. And now, as a part of the Bharat Fund, as well as our associated program called the Bharat Inclusion Initiative, we've been looking at how we can again help this community get access to credit. We've been working with multiple partners, including, I think Ujiwan, who's here, as well as many other companies, to try and see how we can make it easier for people to get credit, because credit's going to be the driver of a lot of businesses. We've been working on use cases around invoice financing, around underwriting clusters, around using publicly available data, alternate data to do credit scoring with different kinds of signals, and so on. And it's been, I think, an excellent journey so far. And I do think that many of the experiments that we are doing and other people out here are doing will start to bring in credit to this community. And once things do start and people see the results, we'll hopefully see much more of it. And I think in this effort, we've been working along with the industry through, for example, with iSpirit, to bring out new ways to get access to more data, to get access to more credit, to do more connectivity across the ecosystem. And I'm sure we'll be discussing some of that later today.
Thanks, Sanjay. That's great. And yes, we do have lots of questions for you. I'm sure other panelists and the audience also have. So I think very interesting, because when we were thinking about putting together the panel, and we were thinking as to how do we do that, and I one of the things which came to my mind that this is an ecosystem play, and I think it's not one particular company or one sector who can do it. It has to be participants. So if you really look at the participants today, the speakers, we have Nitin, who comes from financial services. He's a banker, financial service provider. You've got Gauri, who dabbles with data technology, develops scores, and makes available, makes credit decisioning available. Then we have. Sorry, can you hear me? Hello. Sorry, I seem to have some problem with.
Yeah, we can hear you.
Hear me now?
Yeah, we can hear. It just faded in and out a little bit, but I guess.
Yeah, sorry, just maybe something. Sanjay, who's part, given his work with iSpirit and on the specialing on the thing, it's more platform, and then finally Rahul, who's a practitioner, as he said, who's consuming all of this in order to deliver, a credit or facilitate credit to the underserved segment. So I think that's great. So I think maybe Nitin, I'd like to start off with you again. I think in the same theme, you really touched upon briefly touched upon what Ujjivan is doing in terms of driving the transformation. But I think I'd also be interested to know as to how important partnerships are to your organizations, and how you're using a partnership approach to drive, digitization, drive greater access, and what, and more importantly, from an institution perspective, what are the areas you think, you would like to partner? What are the areas you feel that, you would like to keep it with this thing, and what are the value which the partners bring to your table?
Well, thank you, Kantanu. I think there are 3 or 4 things which kind of are prerequisites for partnerships. One, like you yourself said, that this whole financial inclusion or trying to work with small businesses or any of that subject is really an ecosystem play, like the way we've seen with the cards industry or even with UPI. I think the ecosystem play can only happen when people come together. Uh, for people to come together, what is most important, according to me, is these like-mindedness about the purpose and what they're trying to achieve. We cannot have partners who have different objectives and are trying to get different things out of the same project. So that is one. And of course, it needs to be a long-term purpose. It cannot be a short-term set of objectives. The second important thing is that how do people come together? Either they come together on a one-on-one basis, which I think is unwieldy beyond a point, and it just makes the whole system slow down. And that is where the platformification of all of this ecosystem is equally important. And that's why, the work that Sanjay is doing, I think makes a lot of sense for people like us to come together on a platform like all of us did for UPI, all the banks and service providers, and then build a whole ecosystem around a shared set of technology, shared set of protocols, shared set of objectives, and then eventually grow the system on all sides, which is largely catering to the same set of people that all of us believe in serving. The third important thing, of course, is the commercial viability, because at the end of it, while what Gauri mentioned in her opening remarks about the the cost, the economic unit cost, we all realize that dealing with the unserved, underserved, or the excluded, or the small businesses, or even the work that Rahul's company is doing, the unit sizes are going to be extremely small. And therefore, the commercial viability, if you look at it only from an operating expenses point of view, is one part. But when you look at it from a lending point of view, the viability also needs to take into account what kind of credit losses will you look at, what kind of infrastructure do you need to put in place to collect or make sure the repayments are happening on time. Now, all of that, therefore, then opens up the whole system for an even better collaboration. And that is the kind of work we are trying to do with Gauri's company, for example. Okay, that how do we make sure that the credit discipline improves and we have a better way of repayment? And how can we then, for example, we are working with some other set of partners where we are trying to digitize the whole repayment value chain and, remove the whole dependence on cash, because the dependence on cash, both for consumption as well as repayments, increases the operating expenses, and therefore it slows down the whole scale up. And at the end of it, the last thing I would like to say is that all of this matters and makes sense only when it is done at scale. I think there are far too many people who are very seriously intending to work in this space, but none of us have been able to scale it up to the extent of the potential that exists. And that is why it's very important that all of us work with each other, partner on a like-minded basis, make use of technology, keep the unit cost low, and keep using as much data and information so that we keep making logical progress towards scaling this up. Because eventually what will really matter is going to be how much a scale we are able to establish in this whole approach, rather than trying to do some bits here and there which will make us feel happy but may not solve the problem for the country.
Right. Great. Thank you very much. So Sanjay, coming to you, I think one of the areas which this particular segment is obviously, what we call is data served. Many of them have got smartphones, but we call them dark phones. They use, for SMSs, WhatsApp, but when it really comes to transactions, financial services, and, that's where I think the issue is, which is there. So technically, while they use it for certain, but how much of that data can be consumed? And that's something which I'll come to Gauri to ask. As to also, I'll pose the same question to Gauri, is that, how do we do that? Because, there's a preference for cash, which we have and which is there. But so, I think it's, again, on the concept of ecosystem and the digitization of small business, it is just not about, I would believe, is that about just a person having a device, but how do you basically sort of have certain data which is available about the customer, which can be used and consumed by financial services providers for an effective credit decisioning. So can you just touch upon maybe the role of, a bit on the role on the whole account aggregator, where in one of the, which is very critical component in trying to resolve this issue or solve this data issue, and especially when it leads to the underserved or unserved population.
Great. So Shantanu, thanks for this. So the account aggregator was designed as a way to get access to formal banking data. So if, for example, a customer has a bank account and they're doing transactions on it, then it was quite difficult to actually get validated data which you could trust in a digital form, because you would get printouts of bank statements or whatever, and then you would digitize them. It was a fairly expensive process. And what the account aggregator does is it allows all of the customers' potentially multiple bank accounts data to be brought together in a digital form, which then a lender can consume and make a decision basis that all digitally. And because then that would reduce the cost of actually bringing that data together, and that would then be a big win for everyone. And the other part of this is actually ensuring that there are more transactions, which is really the payment side of it, where if you basically are seeing the growth in digital payments, then that ends up increasing the transaction volume. And obviously, this granular data then improves the quality of data, which again, you can use for lending. So I think these two trends coming together are going to give us a very richer data set and a more accessible data set, which can then be used for faster decision making by the banks. And that's really where I think this plays a very big role. And again, this comes out of, again, the platformization approach, where basically once you make certain things possible in a very standardized way, then everybody can use it, and hence, costs can come down and everybody can benefit.
Right. No, thanks. So no, that's this thing, Gauri. I know you touched about alternate data and introductory, but I think one of the fundamental issues which we have is that while thankfully to the PMJDY and other initiatives, the number of bank accounts in India has significantly increased, and also some of these accounts are also getting funded through the direct DBT transfers and others. But I think the fundamental issue is that there is people still sort of transact in cash. So, whether it's, that's changing, but I think there's a cash behavior which is there. So unfortunately, much as we sort of like, and that could be one of the root causes why, there's an inefficiency of data, insufficiency of the data for this thing. And so just if you can elaborate slightly more that, for a person who's not, let's say, buying goods digitally using UPI or this thing, or not sort of buying online, which is typically a MSME or, micro enterprise or small business, what sort of, alternate data is available and for that? I know you touched about it, but maybe you'd like to speak a bit more about it. How do you sort of resolve this, this whole data asymmetry which exists today in many ways? Sorry, Gauri, you are on mute, I think.
Yeah. So the starting point is the solving for somebody who's not even banked is really hard. And I think and that's a use case we don't necessarily focus on, and it's a pretty hard use case to solve for. So let me start by looking at people who are banked, whether wherever they may be, in metros, tier 1, tier 2, tier 3. The fact that there is transaction data available on the bank statement, irrespective of the depth of the data, or irrespective of whether transactions happen on UPI or online, there is some amount of information available which helps one understand what is this person doing with his savings bank account. Now, obviously, depending on the extent of disposable income, the extent of money flowing through this bank account, and extent of cash transactions, the depth of the data is a lot more transactionally when in tier 1 metro, tier 2, tier 3 cities versus subsequently tier 4 onwards. So there is no question that bank statement, like Sanjay mentioned, and therefore the account aggregator guidelines played an important part, become an important way to work with transactional data. But having said that, therefore you're starting with the banked population, looking at transactional data, and transactional data comes in many forms. It could come in the form of bank statement. It could come in the form of e-commerce purchase behavior. It could come in the form of UPI transaction. It could come in the form of agri purchases. But this is ongoing transactional information that makes assessment of an individual or a small business's ability to repay quite robust. And transactional behavior comes from GST data. So it need not necessarily be law institutional. It can even be statutory, but it forms a core component of assessing one's ability to pay. And then, to go back to your original question, even if somebody is not buying online or doing UPI transaction, there is enough information across traditional data sources between what I call as institutional data, user declared data, could be SMS data, app usage data, or statutory data that can be used. The paradigm shift is really the fact that historically, whether it was the credit bureaus or banks, people were used to working with data through a centralized format. So all banks gave data to the bureau. Bureaus were comfortable with data being centralized. So the concept of federated data, from multiple sources coming together to create a credit profile, which, in our case is a consent-led model because we are not a lender and therefore we need the user's consent, forms really the paradigm shift in the way I would say one looked at data and one looked at data from multiple sources to create the credit profile.
That's terrific. Thank you very much. I think very interesting concept. I think, move from centralized to federated. In many ways, I think the account aggregator route in some ways is also, helping that. Now, this leads me to you, Rahul, and I know you, Stellapse, and you guys are doing some very, very interesting work because, you are using a set of alternate data, and especially, the whole concept of, and you touched upon it briefly as to how using the IoT, you are collecting data points right from, the farm side to up to the dairy value chain. Can you just talk about, this, what sort of a data you are collecting and how are you sort of helping, how does that help making this thing? I know, in this whole informed credit decisioning, and how you're helping those data for financial service provider to, to take a credit decision and offer credit to the very small farmers. So just talk, maybe it'll be useful for the audience to know.
So like we said, so we get data, so we pick up data currently from, it begins at the farm side. As you said, we've got devices there which are now recording the health of the cattle, and from there on, what are the inputs that are being provided to the cattle, good and bad. I mean, bad in the sense they could be medicines and things like that, as a result of which the milk is not to be drunk for some periods of time. So all of those that kind of data is coming in. The core is, of course, once the milk comes in, what is the fat content, and therefore what is the fat and SNF content, and therefore what is the money that the farmer gets. And then based on that, we've actually built up. We mined our data and we realized that we took about 500,000 data customers to Equifax early last year and asked them to look at it. They looked at it and found that about half of those farmers had accessed credit. And then we further broke those data points, broke it down on various parameters. And they actually were able to then build a scorecard for us. Now, just think about it. I mean, to get that kind of data would have taken otherwise years of lending, because as you know, to build a credit score, you need bad rates, you need bads. It would have taken us a long time to pull this whole thing together. So we took it to them and they were able to pull out. And what is it that is significant, is that we are able to provide credit. As Gauri was saying, we are actually trying to crack the problem that most of these people have never accessed credit. So therefore, how do you score them? We are scoring them on the basis of their transaction history and their behavior in bringing the milk to the table. And what has significantly come out is attendance, vintage, how long they've been pouring milk in that area, It is quantity, quality, obviously, of the thing, and therefore the derived income. And from there are various derived factors which only we can get, like the amount of water in milk consistently. I'm just giving you one, small example. There are other such factors which, on the basis of which we've been able to actually pull a score together. And this is a score which, let me say to you, Equifax, and I've been doing this now for many years. I was also a little surprised, quite honestly, but Equifax also were very heartened to see A, the amount of data that we had, B, the deviations that were available, and C, the fact that the score can actually stand on its own, independent of any credit bureau data points. So we have two scores. One is including the data points from the credit bureau. One is excluding those. Even without the data points from the credit bureau, we are able to actually drive a loss rate of less than 3%, 2.5% to 2.25%. If I bring in the credit bureau data, it drops by another 50 bps. So it is incredible that this is now can provide that dairy farmer an option and to move forward. Now, using this data, we are bringing, we are now using this data to actually assess those farmers and using our partner network to give them credit. So that's what now we have started to do. Obviously, we'll have to prove it over time because it's not a straight, while it looks to be a straight correlation, the partners that we've taken it to so far, everybody has, said that we will accept it and we will start tracking it. And over a period of some time, maybe 1 cycle, 2 cycles, we will see how this works and we'll reset it and work on it. But the critical thing, like I think is being discussed here is the fact that these farmers can now access, and a lot of them are women, as you know. Dairy farming in India is predominantly done by women in the household because the man is out in the field, so they are involved very directly in this, and so they are being able to access this credit. And using our existing relationships, we are then taking this credit, taking this data, providing the income also to the farmer. So what happens is that the dairy takes this data and says, okay, now you've poured me 10 liters of milk a day, 30 rupees per liter. I have to pay you, say, 9,000 bucks a month. So this 9,000 rupees I pay you in cash. That's what's been happening by and large. So now what we are providing is a facility for all this money to go directly into the bank accounts of the farmers. It is creating that digital history that is required to actually improve their ability to access credit. So in addition to our score, they are also building up their public profile, so to speak, of digital history, and over a period of time, will get access to more credit. And then you are taking that and saying that, okay, based on all of this now, I will provide, with my partners, I will bring a small loan to you. And over a period of time, I can increase that loan size and take it up further. So that's the essence of what we are trying to do there.
That's great. Thanks. It's a great story. There is, one of the things about, again, continuing a bit on the partnership theme, Nitin, I think, is that, one of the challenges which we have seen, and this also, also Gauri, in some areas, you and Rahul, is, one of the challenges, maybe I'll ask you and Gauri, you and Nitin the same question, and maybe you may have two sides to the same, is that one of the challenges, and it came through one of the questions which has been posed in our, in the chat box, is that one of the challenges in a bank fintech partnerships can be ownership of customer and the customer data. Now, who owns the customer? And this sometimes can prove to be a barrier. So, how do you address the challenge? Maybe Nitin, you can take a shot at this. Maybe after that, Gauri. from a I can see you smile, but that'd be interesting question.
I think it's a debate that will forever be there, and it's not just about a bank and a fintech. Anybody who you work with, and banking or lending, like we are now discussing on the basis of ecosystems and networks. Banking has been a network business, and data has been held by the main relationship provider, and is also available in some bits and pieces to other parts of the ecosystem. There is too much obsession about who owns the data. I think we should all be worried about how can we put the data to use and make sure that we don't end up misusing it. Yes, now that we are getting into consent architectures also, like Gauri spoke about her, approach of consent-based data collection, and in any case, at a platform level, also we are progressing in the country through a consent-based architecture. All of these debates will get settled because finally the customer owns the data. I think all of us have to come out of this whole mindset saying that I own the data and you don't own the data, and you own lesser data, I own more data. Data is relevant to the extent that I have it. You have to maintain confidentiality as part of your contract with the customer. There's no doubt about that. But if there is consent from the customer, either on a one-on-one basis or through a consent architecture, which can open up the whole ecosystem like the way we are trying to do now, I think this debate would be settled once and for all. So we should not be, it would be very regressive to only keep thinking that, let me not move any forward because I want to have walls around my data and nobody else should get in. That was a 10-year-old mindset, I would say.
Right. Thanks. And Gauri, I think I'd love to get your perspective.
Yep. So I think I completely, agree with Nitin that the customer owns the data. So eventually it is the customer's data. But having said that, I think institutionally, when there are multiple institutions involved, large or small, the thinking really has been, to a large extent, the way it has been taught for hundreds of years, which is whoever is the customer has given consent to and is actually asked to act on their behalf is the owner of the data. Anybody processing it on the back end is a keeper of the data. And therefore, by the principle of customer owns the data, the agent of the customer owns the data. So if there is a hierarchy of sorts involved and if there is a negotiation, that's the simple rule that we end up looking at. So when we work with lender partners and the lenders give us their customer base for us to do work for them, we clearly understand that the data and the customer and the consent is with the lender. But when we bring a customer to the table and the customer has given us consent, the mindset is really to say that it's as much our customer as it is the lender's customer, who the customer engaged in a different context. So that's really how we look at data and data ownership.
Thanks. And Sanjay, I think again, coming back to the platform provider, and again, for the interest of this thing, how does, this whole, again, I'm just quite fascinating with this whole account aggregator route where, someone like Rahul can contribute to our data, and that data can be consumed either by Gauri, it could be consumed by Nitin or any financial institution. So he becomes the contributor. So this thing, in that case, how does the ownership of data, because you have someone who's contributing, someone who's consuming. So how does this whole, architecture of, account aggregator address that?
So I think around this table, I think you have complete agreement that the data belongs to the customer. And it can only be shared through any mechanism with consent of the customer. And that's exactly what the account aggregator does, is that it allows this data sharing to happen only once the customer has given the consent for the data to go from a particular source to a particular destination. And if there are any conditions associated with that consent, for example, the amount of time the data can be maintained by the destination, whether it can be refreshed, whether it can be used for a particular purpose or not, all of that is encapsulated in the consent itself. So the idea being that as a customer, not only can I say that this particular entity can have my data, but for how long and for what purpose. And that together creates a complete picture so that then every participating entity knows exactly what is expected of them in terms of that data. And so I think we're moving towards this future where the user is completely in control of their own data, and mechanisms are being built to give them even finer grained control than what is there today.
Right. So I'll continue with you, and one of the things which I think a lot of us, including myself, is quite fascinated about this whole open platform, the whole facilitator platform. Maybe you can just touch upon this. I know a lot of audience have heard about it, but from my perspective, what I'm more interested is that, I think when you talk about small businesses, many of them, as we've just spoken about, is below the Lila form. They might have a bank account, some transactions. What would the journey, maybe, what sort of a journey can we see, Oaken covering, and how would Oaken what are the next steps? How would they start addressing the needs of the credit underserved or the credit people who are not so access to credit? So which is the theme of this entire, so how would that Oaken platform help?
So the Oaken thinking more recently crystallized, I think, in the MSME committee report of the RBI a couple of years ago, where the thinking was encapsulated by that while many of these folks are credit starved, they also end up working with aggregators who have data about them. So if you think of a restaurant aggregator, the restaurants have some of their data, the transaction data with them. Or if what we're seeing with Stellapps, now Stellapps has some information about the milk farmers and what their data set looks like. And so these are people who are now already in touch with the potential customers. They're providing them service. In return, they happen to have some information and data about them. And they could become the pathway by which a bank or a lender could profitably interact with the customer and deliver the loan. And that would reduce the cost because the customer is already on board. And what is needed is now some additional issues around credit evaluation, which may go beyond the data that this particular entity has. So the MSME committee report actually called them the lending service provider and lender service provider, which are basically then working with these customers. So Oaken builds on that framework and sort of encapsulates it by saying that if I'm a LSP, I have a bunch of customers who I'm working with or potential customers I'm working with, I can enable an interface. And on the other side, a lender could enable a similar interface. And through this thing, anybody with a compatible sort of implementation could now talk to this LSP and hence deliver credit to the customer. So that's really what Oaken is. It's the Open Credit Enablement Network, which specifies an interface that must be developed by a lending service provider and a second interface which must be implemented by a lender. And then it allows somebody in between to connect them and thus enables the flow of credit to this end user base. So that's exactly what the system is. And it allows somebody who already has data about customers to use that data to give credit, but also that relationship, which is more important, because that brings down the cost of onboarding customer. It allows smaller quantum of loans to be given and so on, right? I mean, the credit risk is the only piece which it doesn't solve for, which then must be added onto the system through a means of automated or hopefully automated decisioning around either credit bureau data or alternate data or any other lending signals that may be available. So that's really what Oaken does. And I think it opens up a huge space for us to be able to get to this customer base and deliver credit out there.
Right. So I've got maybe two follow-up questions. I think this is great. And I think, so Nitin, from your perspective, I think lending institutions primarily has been dealing with more, user provided data or user collected data, demographics and things, and plus the more credit bureau led data, and that has been the germane of several, credit. It historically has been. Now it just opens up the whole Pandora's box. You could have someone like Rahul who will give you the milk pouring data. You would have someone like Gauri who's providing you alternate data, and then you have, it could be, telco data coming in. It could be, several other forms of data which comes in depending upon what sort of a data is pushed into through the account aggregator. Now, what is the implication for that, from a banking and a financial services perspective? Are there new skills, new areas, new capabilities which you guys need to develop? Because you are moving away from a traditional way how you sort of look at data, measure data, and evaluate data to a completely a different set. So how you're looking at how you preparing yourself, and what additional skills, capabilities, and this thing are you looking at building within your organizations?
Well, I would say I think most of us are today just building the rails to be able to use this data, to be able to make sense of the data, uh, and then start perfecting the data science behind it, which we may or may not be able to do on our own, and that is why partnering with people who can enable that is going to be very important. But I think just the fact that the quantity of data itself will change by a multiplier of I don't know how many times. Banks may not have the ability to ingest all the data and even make sense out of that. So therefore, they will need specialist skills. They will also need to make sure that the data that they are using is first starting to complement what they already have, and then gradually build the ability to use that data on a standalone basis, and then start building more and more sophisticated algorithms around that. But I think I still believe that this whole network effect that will start to play in, because we will learn certain things in one part of the network, we'll learn another set of things in another part of the network. And we don't necessarily need to learn all the chapters of the way that we're going to be progressing forward all by ourselves going through the same classroom session. I think we can keep very easily learn from each other and make sure that whatever we perfected in one part of the network, we can easily implement that through an open architecture. Now, that would also mean that it puts lesser overload on individual banks or individual lenders to perfect their own data science, and data science itself will therefore get reasonably democratized, where people will be using attributes which have already got refined, and those refined attributes can therefore just get plugged in. But that again means that the rails have to be very important. That is where our focus is going in right now, that how do you build the rails so that the logical partnerships can be done on a seamless basis, which could be as simple as even writing APIs for some of the services that we may or may not have today, right? Some of the systems that we use today may not have a surface level capability of delivering APIs. So we have to re-engineer those. Some of the systems that we have APIs for may or may not be usable in the current shape and form, or may not be usable at a network level, and they're at best, productive only on a one-on-one basis. So some of these things I think will go towards building the, the whole capability. And once the capability is there, then you can keep overlaying as much, data science in it, as much skill set on it, but at the same time also learn from various parts of the ecosystem so that you don't have to go through the full learning curve all by yourself, and then realize at the end of it that you're actually quite behind schedule and the world has moved on to something else. So I think this whole collective learning is also going to take place, and that will again happen not just through participation at a principal and a data sharing level, but also the fact that technology will also start getting more and more standardized in the network, which today unfortunately it is not. And therefore we see these difference of approach, and that difference of approach really drives almost like a reverse feed into the mindset of the organization to say that, no, this is not my core competence. This probably is the core competence, is the core purpose, but then the technology doesn't enable you to do that, and therefore you feel a shortchange and you believe that, no, I'd rather stay away from that. So I think that uniformization of technology will enable that, and I think from our point of view, this is what we're trying to do, that build the rails right now. We are in a developmental phase. Once the rails are there, we have a like-minded ecosystem set of partners. We come together on a technology platform which is equally capable of serving all of us, and then we learn from each other and we make sure that we perfect it at the same time and keep raising the bar together rather than one part at a time.
Well, thanks very much. And just before I go back to Gauri for a question, just for the audience, there's a chat box, Q&A box which is opened. If you have any questions for any of the speakers, panel members, please type in your questions so that we may have time to just take a few, but just do sort of put in your questions as which is there. So with that, Gauri, I think again a very similar question. I know you are the cutting edge of technology on data, and I know you're looking at variety forms, but this whole plethora of data, which is the whole ecosystem which is opening up, the account aggregator, you're going to have, multiple people, and people like Rahul coming in providing data, people like, the telco coming in and various form factor. How are you looking at? Do you have all the capabilities which is required? Are you looking at from an organizational perspective to build new capacity, capability? And, how would your services, how would you, what enhancements do you see going forward, given that how the ecosystem is actually sort of evolving?
Got it. See, even in the last 5 years, when we have been in this space, initially access to the data itself was a differentiation. So, we used to be very proud that we were the first non-bureau, non-lender to get access to bureau data. Then we used to be very proud that, we were the first participant to get access to LinkedIn in India, which is a full profile. So I think we've come a long way down to a large extent. Data is no longer a differentiation, availability of data. And I think it's good to see that, because I think if data becomes actually jailed in a particular institution, it becomes problematic. So the fact that data has been commoditized is a lot of credit to the common infrastructure between Spirit and all the organizations like Sanjay, all of them who kind of created that environment of open data and have truly democratized it. Now, if data is really, freely available, then what becomes the differentiation is what Nitin touched upon. It is, how do you process the data? How do you put it into the common framework? How does it complement what lending institutions are already working with? Do you do it over a period of time? Is the tracking of data and the variables in a manner that can be processed and consumed by lending institutions simply enough? I think those become differentiators. And I think we can see ourselves having evolved in that direction from having started out at a place where the availability of the data itself was a key differentiator. And when these two factors actually have brought about a significant change in the fact that a company like us becomes hyper-focused on solving for the end use case, a singular use case or another use case of what do I solve for the consumer? Because if I don't solve for the consumer, the reason for existence becomes rather shallow. So I feel that the movement seems to be in the right direction in terms of having democratized the data and opening up multiple lending institutions to partner with platforms takes away the shackles of the fact that I have APIs and I have a pipe or a road into a lending institution is no longer a differentiation. So what used to be very physical, I think 16th century railroad kind of differentiators have actually been done away with, which I think is really the validation of the larger India stack story. So for us, it's been a lot of focus around looking at the data, processing it with variables, looking at it over a period of time so that we're able to value add to the underwriting or the recovery process.
Right. Well, this is terrific. I think great. I think the whole democratization of data and the credit and making it accessible, I think is possibly one of the biggest game changers which we have seen, and thanks to the work which has gone in on the India stack and this thing. So, we have about another 5-7 minutes, 8 minutes, I'll take about 2-3 minutes for the question to put my concluding remarks. But I just wanted to check as to whether any of the speakers have any questions for any other. So, which means that, do you have any questions for each other? Otherwise, I can pose. So I just want to give you a chance. No? Okay. Okay. So Rahul, coming to you, I think, if there is, I know if there is, as someone who's a practitioner, who's actually sort of, consuming data, developing credit scores, there's a, the thing. If there is about, what are the maybe one or two things you think where the ecosystem could support you in terms of getting to, providing more access to the small businesses, micro enterprise, the farmers who are your constituents?
That's what, sorry, can you hear me?
Yeah, we can hear you. Yeah.
Sure. So actually, for us on the ground, one of the biggest challenges is actually being able to provide a cost-effective, to provide cost-effective credit and to be able to make some money out of this whole process. We've discussed the various challenges, and therefore, something like an Oaken, though initially conceptualized, I think more from an urban MSME kind of a perspective, was something that we pounced on. It takes months to integrate with a bank. Okay, we've been going at it with a few banks, and it just takes a long time. Now imagine the plight to actually go out and integrate on this platform that we've created, where we've got about 5-6 lenders. It's taking an enormous amount of time and effort and money, obviously, to be able to do this. So the moment, like, for example, we came to know about Oaken, we were, right out there talking to them to say that, at the end of the day, these are MSMEs. I mean, if you take a farmer who's got 3-4 cows, he's making maybe 150-200,000 rupees a year. These are exactly what you would look at in an urban environment. Why can't we just, provide these people, and we'll give you all the data. We've got high velocity data. So it's the infrastructure, essentially, is what I'm coming to. At the end of fundamentally, one thing that I've learned in the years that I've been doing this across various organizations is that these customers, retail by and large, and definitely the emerging middle class, so to speak, these are people who fundamentally want to pay. It's not that they don't want to pay, but they have challenges which come along in their lives. And so it is about how we monitor them, the risk management around that. All of this takes technology, if you can do it. Like in a microfinance environment, like Nitin said, we go out and pick up cash, and you're going out there and meeting the customer once a week or once a month, whatever is the frequency of that preferred lender. And here you are, we are seeing this customer daily. She's coming to the center twice a day. So you know exactly where she's, how much money she's making, all of those good things. But her ability to access credit is so limited. In fact, it is shockingly limited. I mean, the total portfolio across all lenders directly into, say, a cattle financing kind of a portfolio will be in hundreds of thousands. It will be less than 10 lakh loans, I can tell you that. And there are 75 million farmers in this country, dairy farmers in this country. We have the largest herd size in the country, in the world. We have 300 million heads of cattle in this country. That's the largest herd size in the world. We are the biggest manufacturer of milk in the world, producer of milk in the world. So these are all the challenges. So we're just trying to, my simple point here is the infrastructure. That infrastructure, to build it, and something like an Oaken can really make maybe a game changer for people like us.
Right. No, thank you very much, Rahul. I know we are almost nearing. So any last words from the speakers, panelists? Okay. So I have really enjoyed speaking to all of you, and I think it's been extremely enlightening. Wealth of experience which you bring, and it is absolutely critical. Not only for us as an organizations, but also for the economy, because given that as I said in the beginning, how much these small businesses, micro enterprises contribute to the employment, the GDP of the country, and it's across the world, across any emerging market. So I think, thanks to all of you doing some brilliant work in facilitating it. This, my key takeaways, if I have to say that, I think starting off saying that, one cannot do it themselves alone. Partnerships are critical, ecosystem partnerships, and we've got here a mix of people, and I know some of you are working with each other. So, I think this is going to be very critical. Platforms, fintechs, financial institutions, they would be very critical, the specialist data providers, to make this happen. As Rahul and Nitin also pointed out that, I think the whole unit economics has to be, because typically some of these loans are very small, and, I think has to be managed very critically. So I think, like Rahul says, that how do you sort of, ensure that, credit is administered in a way in which, I think you keep the loss rates low. I think that's very critical. And I think work which Gauri and others are doing in terms of, the credit scores, building the alternate using data is very critical for people like Nitin to, take those decisions besides their own capabilities, which is had. I think it's also a question of scale. I think given the small size, I think, scales. And the opportunity is huge, as Rahul is mentioning. I think if you look at the size of at least even the dairy farmers, 70 million of them, and the total number of loans which is given, I think we are just scratching the surface. So I think the scale is possible, but using like the Open framework, account aggregators, which Sanjay has mentioned, is a great way to build that scale. And hopefully the momentum is just fine. If UPI is one of the examples which now has overtaken all the major networks to become churning out billions of transactions every month, I think that's if that's to be there, I'm sure that when you look back 2 years from now, I think if you look at the Open, I'm hoping that, my expectation is that that's where we are going to do it. I like what Gauri mentioned about data, and that's something which is really sort of struck on me. That's saying that there's a shift from, a centralized data and a federated data, and data has no longer becomes a unique property of anyone. It's become commoditized. I think this is a great thing which has happened. And then this also helps. So the real sort of USP or differentiator is that how do you sort of use that? How do you sort of create, massage that data, create opportunity, how you structured it, and to deliver decisions which are there. And again, to what Nitin says is that we are still building the rails, and it'll take us a while for us to actually sort of deliver. But I think all of us are in the right path. With this, I'd like to thank all of you. Thank you very much for taking time of your busy schedules to participate in this panel. It's very enlightening. I'm sure the audience has enjoyed it, and in a virtual environment, unfortunately, we can't be together. But I think I've really enjoyed, and so has everyone. Once again, thank you very much. And with that, Arya, over to you.